Hello. All right, we're going to make a video for chapter 1. Let me share my screen. So this is the chapter 1 lecture notes. So you guys pull up the blank ones and you fill it in along with me, or if you want to print them off and then handwrite them in, that's what my students do in class, but it's up to you if you'd rather do it on the computer. So I'm just going to walk you through the chapter, and this will help you to be able to do the chapter 1 homework. You can also read the book. A lot of my students don't like to read the book very much, and so they kind of just scan through it and look for problems and stuff like that. So this is just to kind of give you an introduction into the chapter. So this whole chapter is just all introduction, and it's just kind of like there's no computations or anything like that. So all you're really doing is learning like what governmental accounting is and how it's different than financial accounting. So basically in financial accounting, you guys know that you do debits and credits and journal entries, and you're providing reports to users like income statements and balance sheets and cash flows. Same idea with the government, except for there's this extra level of accountability. So when we're reporting on a business, the people who are relying on the information are people who are investing in the business or loaning the business money. And so obviously we have a very high level of accountability to them, but the difference is with the government is that you're responsible to the entire society. So we have to make sure that we're reporting information that is correct and that we don't overspend and things like that. So it's all very interesting. So as far as what is a governmental organization, that's kind of where your chapter starts. So there's general purpose governments and then special purpose governments. So, and we're also going to talk about nonprofits as a separate category to governmental accounting. But as far as governmental accounting goes, general purpose governments are providing citizens to we're providing support to like whole groups of people, whereas special purpose governments are just for a single like group of people, but not the entire society. So an example of this might be like a public hospital. Maybe for the first one, let's put like an independent school system. So similar to USD 259. Not everybody uses USD 259, but they are a part of the overall government system. So also like public colleges and universities, whether it be community colleges or four-year schools like Wichita State, K-State, KU. Friends is a private school, and so we do not receive governmental funding. So we get financial aid money, our students get financial aid money, but we do not get money every, like for every student that we educate. Whereas USD 259 or K-State or Wichita State would get money for the support of individual students. And then the other one is public hospitals. And so if there is a city-ran hospital, that would be another example of a special purpose government, because not everybody uses the hospital, but it's there to benefit the public, right? So a not-for-profit organization is a little bit different than just like the government. So the accounting will be a little bit different. But one thing to point out is they're usually exempt from taxes. Now, not-for-profit doesn't mean they don't have to file tax returns. And so I had somebody one time say that to me. They were like, oh, it's a nonprofit, they don't have to file taxes. I'm like, no, they file taxes, and they actually have to file more taxes because they have to show and document and prove that they are not using their money for any purpose except for the purpose of the nonprofit. So Friends University is a nonprofit. And so what that means is I'm on the budget committee of the university, and our goal is a break-even budget. So we are not trying to make money, we are trying to cover all of our costs. So sometimes people are like, oh, it doesn't matter what they charge because they're a nonprofit. Well, actually it matters a lot more because we have to make enough money to be able to pay all of our bills. And if we don't do that, then we can't stay in business. So it's still important. And we have to, when we file tax returns, and so, you know how as individuals file a 1040, a not-for-profit files what's called a 990. And so it's a separate kind of tax return where they show all the money they received for the purpose of running their nonprofit, and then document that they used it for the purpose of the nonprofit, whatever the purpose is, whether it be public education or public hospital or whatever it is. So examples of nonprofits would be like religious groups. So churches, things like that. Community service groups, private education, museums, things like that. So all of these would be considered examples of nonprofits. Like the Red Cross would be like a community service type group. Private education would be things like Friends. So also places like, I don't know, Trinity and Collegiate and the Catholic diocese school systems, all of those would be examples of private education. So museums that are operated as kind of part of the city, they can be like a separate from the city, or they can actually be included in the city financial statements as like a separate fund. So we'll learn about funds pretty soon. And that's why the name of the class is Fund Accounting. And like I always say, it's like fun with a D, but it's not at mine. So, okay. So governmental accounting, very different from financial accounting. And so it uses a different accounting system and a different language. And so we always say like accounting is the language of business. So we talk about like assets and profits and things like that. Governmental accounting is like a whole separate animal. Like it's completely different than any accounting you've seen before. And so the reason why it's different is kind of what we're going to talk about first. But the most important difference is you're not charging for a service. So in a financial accounting system, like you have a customer, they come to you and they're like, I need you to mow my yard. And you're like, all right. So you charge them for mowing the yard. And then you have your cost involved and you see if you make money at it. So in a nonprofit, in a governmental organization, the citizens pay us money, taxes, right? But not in exchange for any specific goods, right? But I have students constantly, like I teach tax, I teach a lot of different things, complaining about having to pay taxes. And I'm like, are you glad that you can pick up the phone and call 911 and someone will assist you? Like you could say, my house is on fire and the fire trucks come and they take care of you. Like, is that something that benefits you? And they're like, yeah. And I'm like, okay, so maybe you've never had to use it. And I am so happy for you, but you're glad it's there. And that's why we pay taxes. We want roads to drive on. We want the police to protect us and the fire department to protect us. There's a lot of benefits of being a part of a city. And that's how this works. That's why the government is there to exist. So benefits are not proportional to resources provided. So you don't want to have to use the fire department or the police department, but you're willing to pay for it, right? So another important difference is that lack of a profit motive. And so the city isn't operating to make money. They're not trying to make profit, but they are trying to operate in a way to cover all their costs. And so businesses try to be profitable, nonprofits and governmental organizations try to recover what their costs are. So there's no ownership rights. And so when we do a balance sheet and we say assets equals liabilities plus owner's equity, there's no owner's equity. So because there's no owners, like who owns the city? All of us, right? So, but we're not stockholders. We don't get dividends. So in a nonprofit, there's not owner's equity. But what we do is we do assets, liabilities, and then the difference between assets and liabilities we'll call net assets. And so, or we'll call fund equity. And so there will be some differences, obviously, because every year you're not going to have exactly breaking even. And so there's going to be some differences every once in a while, but you don't sell shares of this kind of stock in the government. So other differences, you can't match revenues with spending. We're going to use this fund accounting. We are going to actually record the budget as a journal entry. I can't wait to start showing you journal entries, but that's not till chapter 3. So starting in chapter 3 and for the rest of the chapters, we're going to do a ton of journal entries. I'm super excited. But right now, we're just going to learn the idea of it. And so we're going to actually record a journal entry for the budget where we have estimated revenues and estimated expenses, which are going to be called expenditures, not expenses. We'll get there. So we're going to use the modified accrual basis. So you guys know the cash basis. The cash basis is when you record revenue, when you receive the money, and expenses when you pay the expenses. And there's the accrual basis, where it's revenue when you earn it and expenses when you incur them. We are going to use this modified accrual basis, which is kind of like half and half. Okay, so we're going to focus everything on current. And so everything is considered current in certain funds. And we're going to go through and kind of learn about that. So we're going to unpack this a lot over the first 4 chapters or so. All right. So how are governmental entities different than nonprofits? Governmental entities, the power rests with the people. So often I hear people complain about how their government is being ran, and they were like, you know, I don't like how they're running it. Well, you elected the people who are running the government. And so there are, right now is election time. And so I was researching school board members because it's so important. I watched a lot of school board meetings over the last year and a half of COVID than I ever had before. So we were all watching anxiously, waiting to see if USD 259 was going to tell us that we were going to have school or not have school, wear masks, not wear masks, all of that. And so all of us were anxiously watching it. And so I got to know my school board member a little bit better by watching him on TV and realizing what I liked about him and what I didn't like about him. And so now I'm researching the new school board members that are coming up to see if they're good choices. Same thing with the city. So there's going to be a new mayor. So I live in Bel Air, and so I live on the outskirts of Wichita. And so there's a runoff for the mayor. I don't think anybody's running against the guy, so it's not like it's going to be a win-lose situation, but the power rests with the people, and the people vote or delegate that power to public officials. So we have the power to tax citizens for revenue. That's that we have the ability to do that, and that's how cities and governments operates. That's how they make money. So here's just some criteria for determining if a not-for-profit is specifically governmental. Governmentals are nonprofits, but not all nonprofits are governmental. I'll say that again. Governmentals are nonprofits, but not all nonprofits are governments. So the government is nonprofit because they're not trying to be profitable, but there are nonprofits that have nothing to do with the government, like a church. Okay, so it depends on whether the public is the one that's choosing the people who are running it and things like that. Okay, so here are our sources of GAAP. There's the FASB, the GASB, and the FASAB, which is like FASB, but with an extra A in it. FASAB, I don't know. So we all know about the FASB. So I'm going to start with that one. And this is the one that we use in financial accounting. Okay, so this is the Financial Accounting Standards Board. Right? And so this is what we use in accounting, but we also use it for non-governmental nonprofits. So non-governmental nonprofits will also use FASB. Okay. GASB is the Governmental Accounting Standards Board. All right. So the Governmental Accounting Standards Board, we're going to use that for governments and for governmental nonprofits. And so there are certain nonprofits that are governmental nonprofits. We'll talk about that later. And then this is for the federal government. And so this one, FASAB, is the Federal Accounting Standards Advisory Board. And so whereas this FA is financial accounting, this FA is federal accounting. So Governmental Accounting Standards Advisory Board. And this is for the federal government. Now, I would love to teach a class on how the federal government works. But federal government is separate than city, state, local government, which is what we're going to focus on. City, state, local government. The county, the city of Wichita, the state of Kansas. But the federal government has their own operating standards, which are more GASB related than FASB related, but they have their own category. And so this class does not cover this or this for the most part. We're going to focus almost exclusively on the GASB. Okay, so we talked about how the main reason why governmental accounting is different than financial accounting is because of the objectives. And so I'm going to go ahead and write out this quote. That's why I had my notes printed, because it's a long quote to put in here, but let's do it. So accountability. All right, accountability. I was looking to see if I have that button to make it not be in all caps. But accountability is the cornerstone of all financial reporting in government. Okay, so this is super important. I made it a funny font on purpose. I was just going to put the word accountability in the funny font, but I can't really change it right now without clicking a bunch of buttons. The whole reason why governmental accounting is different is because of this accountability standard. We have to hold ourselves to a much higher level of accountability because we are accountable to the people, all people, not just our investors, not just the people who are loaning us money, everybody. So everybody relies on the city. And so we have to be extra cautious about making sure that we don't overspend, or that if we say we're going to spend something on a certain category, then that's what we spend. I mean, like, so overspending is like the main concern. We also have to make sure that we only charge for this year's expenses with this year's revenue. People move in and out of our city. So we shouldn't be pushing our tax burden forward to people who don't live in our city right now. And so basically everything we plan to do this year should be paid with this year's revenue from the people who live in our community this year. So, all right, so that topic is called interperiod equity. So interperiod equity refers to the concept of paying for current year services so as, probably not to shift the tax burden, that's what I want to put here. Yeah, not to shift the burden to future year taxpayers. So what we do this year should be paid for the people who live in our community this year. And if we want to build a pool or something like that, then we can do it through like debt service funds and different things like that to borrow money over time, but we have to ask permission of the citizens to be able to do things like that. So the current periods cost, like the police officers and the fire people and all that kind of stuff, all should be paid for with current tax money coming in this year. So this is so important to accountability. So it's the government's obligation to disclose whether current year revenue was sufficient to pay for current year benefits, or did current year citizens defer payments to future taxpayers. So we, as the government, when we do our governmental financial statements, have to disclose that, explain that. How well did we do? All right. So next, there's just some information about our financial reports that we're going to provide. And so this report is called the CAFR, which is a weird thing to say. It sounds like a farm animal, a CAFR. And so it's CAFR. So it's a comprehensive annual financial report, and it's the report that cities put out, or states or local governments like a county, so or a township. So there's going to be these specific parts to these general purpose financial statements. We're going to spend a good chunk of our time in this course looking at these general purpose financial statements, and you're going to start that right away. So management discussion and analysis is very similar to what you would see in a financial MD&A section. So that financial MD&A section includes things like management explaining certain key concepts or certain key numbers or performance. Same idea. The city's financial officers would report on how well the city's doing. The government-wide financial statements, and then the fund financial statements. This is the key main part that we're going to spend a lot of time looking at, even though we're going to look at everything. So this is the equivalent of our income statement, balance sheet, cash flows, statement of equity that we see in financial accounting. So in financial accounting, we have 4 financials. We do the income statement first, and then we do some kind of statement of changes in equity or statement of retained earnings. And then we move on to a balance sheet, making sure that our balance sheet is in balance. And then we have a statement of cash flows, my favorite. And so we will not do a lot of statement of cash flows in this class. It's sad. But we will have government-wide financials, which look at the government as a whole. And then we'll have individual funds, like how did the capital projects fund do? So what did they spend on the building of the new swimming pool? So if that's an example of a fund. So they'll have all the individual funds that roll up into the government-wide financial statements. And then we have notes, and then required supplemental information, which would be things like some statistics over the last 5 years, or maybe it's information like the population, things like that. All right. So next, we're going to go on to an introduction to what actual fund accounting is. So we always say, right, that we have, it's like fund, right? And so fund accounting has a separate group of funds that all report up to a whole umbrella. I'm like talking with my hands. I know my picture over there is really little, but the funds are individual pieces of the government as a whole. So think of the government as a whole as an umbrella, and then the individual funds will be underneath. And so the individual funds, there will be a general fund, which we'll talk about in a little bit, maybe next chapter. There will be other funds like special revenue funds, capital projects funds, debt service funds. And so all these individual funds fall under the umbrella of the entire government. So we're going to break down all of those funds in chapters 2 through 9, which is what we're going to be doing for the rest of this semester. So our fund categories, there are 3. And so they are governmental, proprietary, and fiduciary. So governmental is ones that that we're going to focus on first. And so the governmental funds will be covered in chapters, we'll kind of introduce them in chapters 2 and 3, but then we do the general fund in chapter 4, and special revenue funds and debt service funds and capital projects funds. And so those all happen first. Proprietary are the business type funds that fall within the government. So for an example, the best example to think of probably for proprietary funds, I want you to think of the word sole proprietor, like owner. Okay, so these are business type funds, like a business with an owner. And so a good example would be like the water department. So the water department is part of the overall city. So it's part of the city, but they actually do charge for a service. So they are charging for water, and then people pay, and they basically are trying to operate as a little business within the city. So that's a great example of a proprietary fund. And there's going to be 2 categories of proprietary funds. And then fiduciary is talking about like trusts and things like that. So agency funds, things like that. And so like if somebody gives money for a specific purpose, they donate money to the city for a specific purpose. So maybe they donate money so that a park can have new benches. Okay. And then maybe they want to renovate the park. So they donate money to renovate the park, and they want the money to stay in perpetuity. Perpetuity would mean we're going to put money in and we're going to say, we're going to give you this $1 million and you guys are going to rebuild the park. And then you're going to maintain the park with this money. And so the profits from the money that sits in perpetuity, meaning forever, will be used to maintain the park and make sure it stays in good condition. So that would be an example of a fiduciary type. So governmental fund characteristics, we're going to use the modified accrual basis. Everything will be current. And so, and we're going to really, really pay attention to our budget. Okay. So modified accrual, we kind of mentioned that earlier. It says revenues recognized when measurable and available. Measurable, meaning we can measure it and they're actually available. So we either have the money or it's on its way, basically. So we have to kind of estimate what the bad debt expense is going to be and things like that and report that too. So, and for spending and expenditures when incurred. So when we incur them, it's when they'll be an expense, just like in financial accounting. But notice that it doesn't say expenses. And so this is the first time you've seen that word in this chapter in fund accounting. And it's a really important word. It's expenditures. So an expenditure is a cash outlay, meaning you paid cash. So in financial accounting, we have expenditures, and it's anytime you pay money. And then you either expense it or you report it as an asset. So if I gave you an entry in financial accounting and I said, bought supplies on account, then you'd be like, okay, if you buy supplies, then you're going to put it in the supplies account, right? But if it says paid employees, then you would expense it. And so if it said bought equipment and paid cash, that expenditure is going to be recorded as an asset because you expended money, but you bought equipment, so you're going to record it as an asset. And then if another expenditure was paying your utility bill, then you're going to expense that. So like whether you capitalize it is the phrasing we use in financial accounting. So proprietary and fiduciary accounts are going to use the accrual basis, and they are going to have current and non-current assets. All right, so here I'm just unpacking the CAFR. So remember the farm animal one. And so there are 3 sections of the CAFR. There's the intro section, the financial accounting or the financial section, and then there's some statistics. So there's 3 sections of the CAFR. In the introductory section, you're going to see a title page, content page, and letter of transmittal saying that they've submitted the records. In the financial section, it'll start with an auditor's report. So we'll have an external auditor that will make sure the financial statements are okay. And then we'll have our actual financial statements. And so the government-wide financial statements, this is the entire government. And so they are going to do the equivalent of a balance sheet and an income statement. Okay. Notice they don't have a cash flow statement. They don't have a cash flow statement. It's just a balance sheet and an income statement. And so we will look at and create examples of these throughout. So a statement of net assets. Net assets is like net revenue. Net revenue is the difference between your revenue and then you subtract your contra revenue, like your discounts and returns. And so net assets is your assets minus your liabilities. It's the difference between your assets and liabilities. And so if you look on page 16 of your book, you'll be able to see an example of that balance sheet. And this statement of activities, we don't call it an income statement because we probably won't have any income. And the other big thing is we won't necessarily have expenses that tie to specific revenue. So we'll have our expenses, but they're not called expenses, they're called expenditures. And it'll be things like public safety and public works and different things. And then we'll show the money that came in to cover that. But you can't really tie the money to specific categories for revenue because you're going to receive a pile of tax money to pay for all of the different expenditures that we have. So as far as fund financial statements, there are the 3 categories of funds. There are governmental, proprietary, and fiduciary. And so for the governmental funds, they'll have a balance sheet, a statement of revenues, expenditures, and changes in fund balance. So this is like an income statement. And then this is like a statement of changes in equity. Okay, no cash flow. And then there will be some notes. Okay, and so we're going to use the modified accrual basis. And then there's a reconciliation that I won't make you guys actually do, but you can see it. You'll see examples of it. So then as far as proprietary funds go, they're going to actually have a cash flow statement too. So they would do the same financial statements as we would in financial accounting. So this is basically the equivalent of a balance sheet. This is an income statement with a change in equity attached to it, and then also a statement of cash flows. And so you can see examples of those on the pages of the book. And so they will use the accrual basis of accounting. And so, and you will get to see those. And so not everything rolls up into the government-wide financial columns. So we'll see that later. And then in the fiduciary funds, they basically just have a statement of fiduciary net assets. Okay. And so this is just basically a balance sheet. And then this one is changes in net assets, which would be like an income statement kind of. So really it's just a change in the equity because they're not going to operate in order to make a profit. All right, so still within that financial section. So we're in the basic financial statements section. We will also have the required supplementary information, which would be like extra notes and things like that. And then some combining statements and schedules. And then in the statistical section, you'll see tables and charts with lots of years of data and that kind of stuff. So just to wrap things up, basically in this class, we're going to really focus on GASB, but you're going to become more familiar with FASB because we're going to look at the differences between it. And we're going to focus primarily on governmental and then other nonprofits and how they're different than regular businesses. And so okay, so that's it for chapter 1. So you guys are ready to go do the chapter 1 homework. And so let's take a look at that together real quick. So I did create an Excel template for you guys to do your homework, just to kind of help you to save time and to kind of keep you all together. And so I don't usually create templates for my upper level classes. And so this is the first time I've done that. But I'm trying to try something new with you guys. And so let's see here. So out in Moodle, I guess I should have went to it through Moodle, but you guys can see the chapter 1 homework. And so I'll pull it up through Moodle too. And so I basically have the homework. It's all just right here. It's just one page. And so this is what it looks like. This is the whole homework from chapter 1. So you're going to say what standard setting body is for these different groups, whether they use FASB, GASB, whatever, the 3 sections of the CAFR, and then what's in there. You can get that from the notes. And so then you guys, the rest of it is looking at the city of Wichita's financial statements. There's a link to that in the syllabus. Also, you can just Google City of Wichita CAFR and it will pop right up. And so we're going to use the most recent one, which is the data from 2020. And so I want you to go find what's in the intro section. When I gave you 2 rows like this, it's so that you can have enough room to write. Does it match what the book suggests should be in the intro section? Are they audited? By who? Is there an unmodified audit report? Does the CAFR have government-wide financials and fund financials? How many? And so you're just going to answer those questions. And then when you're done, you're going to upload that to Moodle. So we should go look. Let me see. Here's your online class. And so this is chapter 1. And so the notes we just filled in. And so this is extra stuff that comes with the book. So I just put it out there, but I don't ever use it. So chapter 1 homework right here. So if you click there, it's due on Sunday at 11:59. There are 8 of you in class. This is the template that you'll use, and then you'll submit it right here. The other things we're going to do, we're going to cover chapter 2 this week also. Most chapters we don't do 2, most weeks we don't do 2 chapters. And so don't panic that there's always going to be 2, because almost always there's only going to be 1. But then we'll do a week 1 discussion to get to know each other. These are going to be very quick little activities. The discussions are going to be very low key here. When we get to chapter 2, that's when you guys will do a quiz from chapter 1. I want to give you the homework solutions back before you take your quiz. And that's why I moved the quiz to the following week. So, all right, that's it for this chapter. Thank you guys. Have a good day.